Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since posting a Dragonfly Doji, the Australian dollar has maintained a bullish bias for 6 consecutive days, while the US dollar index remains flat at 105.60. In US economic data, according to the Commerce Department's report, US gross domestic product, or the GDP, grew at a seasonally adjusted and inflation adjusted rate of 1.6% in the first quarter, falling below the previous 2.2 growth. This marked a decline from the previous 3.4% rate in the fourth quarter and missed the expected forecast of 2.4%. Looking ahead to Friday, the March Personal Consumption Expenditures, or the PCE index, the Fed's preferred inflation gauge, is scheduled to be released. As all eyes look to the crucial data, along with this, Fed policymakers are currently in media blackout ahead of their May 1st policy meeting. Given the sensitivity to this data, traders should exercise caution just in case we get a very whipsaw price action from the release. As we look to the current pattern, the Australian dollar trades around that 60-day moving average, which is around 65.35 to 50. Not quite breaking above there, but still holds potential of clearing this level, which would open the path further to 66 to 67 cents. And with any pullback likely to be shallow, views support around 64.45 to 55. The euro also maintaining a positive stance and posts an engulfing candle, well, just to that, and therefore looks as the technicals with both indicators marrying up to a positive bias could see further gains with the level of 107.1015 cleared, which should expose towards 107.8090 or maybe even onto 109 area. Any pullback likely to be shallow with support seen around 106.8085. The Japanese yen weakens as the market price crusades higher and now at 156 with still no intervention from the Bank of Japan as we trade around the June 1990 highs. Meanwhile, Tokyo's consumer price index, the CPI inflation data, slipped from 2.6% to 1.6%, while the Bank of Japan kept rates on hold as widely expected at 0.10%, which has initiated the further gain in momentum. With a trend overheating by the ADX, I am very cautious at these levels with extreme overbought conditions. Could see a significant downturn as volatility is likely to get high as we get closer around this 156 to 157 area. Although no view is seen to the top side, any potential downturn would require prices to fall below 153.70.80, which is some way away. Although given the distance, the market can still penetrate this level very, very quickly and therefore could plummet back towards the region of 150.50.70. Still, wait for the break, and as I mentioned, at 153.70.75 and reassess from there. Market balls were very strong again for sterling into the fifth consecutive session, and since rebounding off that key level of 123.25.35, market looks like it can now challenge the 126 to 127 area given the strength and also the MACD and the RSI marrying up to support a bullish case. Any pullback is likely to be shallow around 124.65. The gold is attempting to break higher but still contained by this trend line. And while intact, I do anticipate further weakness that could take it down towards the region of 2,250 to 2,270 and reassess from there. Any break above that level seen at 2,333 to 37 should signal upward momentum warranting a reassessment. So do be on your guard if we do see a break of this trend line. But presently, with the technicals remaining heavy, does warrant a further down test. Wrapping up with vol, we can see the market is attempting to climb towards a level of 84.2040, and while intact, I still anticipate another downturn, which could lead all the way towards the region seen at 79.80.90 and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the internet report, and I hope you enjoy the great start to the new weekend.